Morning, this is Steve Freed in Chicago with the morning grain comments. Well, overnight prices were a little bit better. Yesterday we had a rally in wheat market because of two things. Number one, some technical buying, but also some talk that China may soon announce their import quotas for wheat. It could be around 9 million tons. Annually, normally, China takes about 2.5 million tons of wheat, mostly from Canada. But there is some talk that if they sign a trade deal, the deal could include as much as 5 million tons of U.S. wheat. So that's catching a little bit of a bid in the wheat market. Soybean oil making new highs overnight. Palm oil made 3-year highs overnight. And soybean oil continues to follow palm oil, mostly on talk of record China demand for vegetable oil, and also talk about lower supply of palm oil this year. As far as the rest of the market is concerned, beans and wheat are up against some pretty strong resistance, while corn continues to drag along seasonal lows. I think that as we move ahead, the January USDA report probably won't make a lot of changes in crop production, and there is talk that the World Outlook Board probably will not increase U.S. exports because of the potential of the Phase 1 deal. Now, some people for 2021 are, for corn, showing a carryout as low as 1,600 million bushels versus the USDA's 2,733. They increase exports by 350 million bushels, FSI by 300 million bushels, and they drop the crop maybe 100 million bushels. So all of those things have to kind of fall into place if corn wants to rally. Over in the wheat, USDA's got a carryout of 881. Some people are as low as 700. Again, increasing exports by 150 million bushels. And for 2021, USDA for U.S. soybean, it's got a 530 carryout. Some people are as low as 350, with adding 150 million bushels of exports. We also have had here in Chicago a mild winter. Some people thought the temperatures were going to be mild, but they thought that we'd have a little bit more precip than we have had. So I asked our weather guy this morning, does this impact U.S. spring or summer weather? He said no. Basically, he's looking for a little bit of above normal precip in the spring, not as bad as last year. And he's looking for a little dryness to develop in the summer, but again, not as bad as 2012. So overhanging the market on the potential resistance is farmers increasing corn and soybean acres in 2020. And if we have trend yields or better, that should offset some of the talk about increased export demand and could begin to push prices lower later in 2020. So as always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.